Welcome to Trend Trove TV. Before you put a single dollar into the stock market, we think you'll want to hear this. Here's how I would build a hypothetical $1,000 portfolio using Vanguard ETFs, which track the S&P 500 and have low fees. Investing can be hard. There are thousands of investment products, and not all of them are very good. However, one asset class worth considering is exchange-traded funds, ETFs. For many investors, ETFs are a smart choice thanks to their diverse stock holdings, solid performance, and low fees. Let's get started. First up is the Vanguard Information Technology ETF. With a 10-year total return of 531% and a compound annual growth rate, CAGR, of 20%, it's hard to find a Vanguard ETF with a better performance history. The fund's top holdings are Microsoft, Apple, Nvidia, Broadcom, and Adobe. Its expense ratio of 0.10% means you'll pay only $10 annually for every $10,000 you invest. Due to its heavy tech exposure, this isn't an ETF for every portfolio, but it's certainly one to consider for most investors. Next is the Vanguard Growth ETF. This ETF boasts many large-cap growth stocks, meaning it's loaded with magnificent 7 stocks like Microsoft, Apple, Nvidia, Alphabet, and Amazon. Given its focus on growth stocks, there's not much in the way of dividends. The ETF sports a dividend yield of only 0.6%. Performance-wise, the Vanguard Growth ETF has been above average over the last 10 years, delivering its investors a total return of 295%, which works out to a CAGR of almost 15%. Moreover, with a tiny expense ratio of 0.05%, investors give up only $5 in fees for every $10,000 invested. To sum up, this is an ETF growth-oriented investors should strongly consider. For investors looking to duplicate the performance of the S&P 500 with a low expense ratio, the Vanguard S&P 500 ETF is a name to remember. The ETF sports a minuscule expense ratio of 0.03%. Since it tracks the S&P 500, its weighting currently reflects the top-heavy, tech-focused nature of the S&P 500, with magnificent 7 stocks dominating its top holdings list. Yet it also has other, more value-oriented names among its holdings. Healthcare and financial services stocks, for example, each comprise about 13% of the fund's total holdings. You won't outperform the market with this ETF, but you will replicate its performance. And thanks to those rock-bottom fees, investors in this ETF won't give up an arm and a leg to do so. Next, there is the Vanguard Total Stock Market ETF, VTI. This is the kitchen sink ETF. It has a little bit of everything. Sure, the magnificent 7 stocks occupy its top holdings list, but beneath the surface, many other stocks and sectors included. Please always do your own research. This is not an investment advice only suitable for educational purposes. You are encouraged to seek advice from a qualified financial advisor.